Okay, today concludes day 12 of trying to beat the S&P 500, and I fell short. Here you can see that my portfolio gapped up 0.82%, but the S&P 500 gapped up 0.97%. And if we go into some details and we look at, okay, what was the gain or loss in terms of the positions that I closed out on, I did a loss, or I got a loss of $76, which stings because most of that is coming from my short positions. Now, why I'm so keen on continuing to have short positions is because I want to be able to be profitable and really learn how to best enter and exit trade positions, because once you have that understanding, I believe no matter how the market is, you can find opportunities. And although I've had losses with my shorts, I would like to point out the fact that the market has done nothing but increase. Despite that, I think I've kept those losses to a minimum, because I have started to learn differences in strategy and how stocks move comparing shorts to longs. With that said, I want to review two exciting short opportunities that I do think will play out and actually be profitable in the future. And I'm excited to share that. So the first one is ICUI. And this is, there's a lot going on here, so let me remove everything. First thing I will review is the fact, or at least I'll admit, is the fact that it is it's reached and surpassed 52-week level highs. Not good, especially if you want to short. But I'm staying strong, and there are two things or two factors that I think, at least even in the short term, that play to my advantage. And that is the cup and handle pattern, as well as the resistance level, which is part of giving an idea of where the handle will start, and the fact that it hasn't really had any type of retraction or area where it's cooled off. And even if you look at the best performing stocks like Nvidia, it has cooling off periods, not just consolidation, but a retraction, ever so slight compared to the monumental gains that it has, but still. So both of those have convinced me to have a pretty hefty position size of almost, you see here, 14,000. And believe it or not, even though I am in the red for sure, it's only $600 in the red, which is pretty good considering the fact that I actually bought around here and built my size up as it went along. Did I enter too early? Definitely. But that's all part of the learning experience. So the second one, which I'm break even right now, is Caesars Entertainment. I don't know why I struggled with that, but here I have that line drawn out. It also resembles a cup and handle pattern. I think this is a strong resistance level, and in the daily time frame, it is overextended, and I think that creates a lot of possibilities in the short run, where I at least expect it to drop to intersect or meet this exponential moving average level. It might drop below, because all of the companies that I short, I believe and I've observed, have long-term downtrends. So if you look at something like the 3-year, you can see that it's just made it's made lower lows and lower highs. And the idea and concept behind that is that once a company does really well, it continues to do so. Same thing on the other side, where if a company does poorly and has poor financials, those problems start to aggregate and snowball. And that is the premise behind shorting stocks that have long-term poor price action and buying stocks that have good price action, which is why previously when we were looking at ICU, the 52-week high was not great because that could continue to build momentum and signs of strengthening. So thankfully it's not the case with CZR or Caesars Entertainment. And one thing I would like to note is these green lines represent limit orders, and they're buy orders. That's why they're green, buying back. So it's still exiting the position, but because I'm shorting, it's buying back. And here is a alert that I have. This is for entering into a position if let me show you place. So if it goes above 43 and 67 cents, I get a notification to short 20 shares. Why not just put a sell short limit order? Because I'm not allowed to, because I think it is a highly traded. I'm not entirely sure why this broker doesn't let me, but I can only do so 30 minutes before market open or during market hours. So not a big deal. I think the solution that I found is just to make an alert. And a distinction that I will make between Caesars Entertainment and ICU Medical is that Caesars Entertainment is not anywhere near the 52-week highs. So I will be comfortable as it drops and has that retraction to start building my position as it starts to recover a little bit. But with ICU Medical, once it has that drop, I am out, because I wouldn't be surprised if this stock continues to do well in the long term. All I'm looking for is that drop and to exit all of my positions. So you can see here I have 78, and I already have limit orders for majority of that. I don't have any types of alerts to buy above or anything. I want to get out of this trade. And that's everything for today. I'll see you guys next time.